What's up, everybody? Today we're going to be doing the January 24 Top Opps Dissected. And as I tweeted out, I thought this month was a really good month and probably the best month since March of last year with the banking crisis. And this is particularly due to the moves in the crypto miners as well as the Momo breakouts in Nvidia and SMCI. All of these were really amazing moves. Nothing was so super crazy, but overall this was the month to go aggressive on compared to especially how shitty the back half of 2023 was, I think, for most traders. So as far as the opportunities, we're going to be going over the cryptos, CYTK, the semis, Docu, Save, Fun, and Mark, and a whole mix of them. There's actually a lot of stuff to break down, so let's just dive into it. First, we're going to discuss coin. I did a couple TikTok videos on this, one of which is talking about the swing short once that kind of trend broke from the highs, and the other is this intraday play that I'm going to discuss in a little bit more detail. And so what's so nice about this is on the daily chart, we kind of very quickly retrace a lot of that up move and we go towards that moving average, which is just that middle Bollinger. So I'm not necessarily thinking some huge big picture move or some bounce here because we were run up, but what does happen is on the intraday, we have a nice flush out. And so that's where, as an intraday trader, you can catch nice little legs, even though big picture, you know, I didn't really have any strong view there other than we might find support at that moving average. And so what I want to highlight here is we're overextended on that daily over the last couple days. We have this equilibrium area off the open where we're kind of just holding around like $1.74, $1.73. Then we kind of break those lows and we really melt over 10 points in a straight line. That's a pretty damn big move. I don't want to say that I love this. I don't want to say this is the best move ever, but for us to make such a sharp move down to that daily moving average, I certainly don't mind buying the right side of that V once we break prior bar highs. Again, like, I don't think this is an amazing trade, but we do have that stop against lows. Traditional stop of the trailing 2-minute bar lows gets us a nice gain. And so you end up making about $6 or $5 on whatever shares you get. And so again, this is just a single I want to highlight because I think the crypto miners didn't set up yet for some super epic, amazing thing, but there were a lot of volatility and there were a lot of small opportunities within that. I know a lot of people always look for the home run, but there's also just the singles in there. So this Mara is going to end up being a very similar concept, even though it happened a week or two later. So what we see, Mara had kind of that sell the news day on the ETF approval, but then we keep melting. And at that point, we've retraced a huge amount of that overall move. So kind of similar to that coin concept I just dissected. We're approaching that lower band. And so then the same exact type of thing happens off the open on the intraday, where right off the open, yes, we don't have an equilibrium range, but we just melt. Super big move, super sharp. And what you can do there is buy, again, the turn, the right side of the V, give it a stop at lows and catch a really nice leg higher. This actually retraced incredibly well. So again, I don't think this is some home run trade. I'm not necessarily so encouraged to hold this super big picture. I mean, this one in particular was kind of interesting just because it retraced so much of the overall range. But again, we're intraday traders. The most probable leg is going to be to simply catch those clean little moves. This did end up continuing to go lower, actually. And I think when you approach those higher timeframes, you do take on more variance. So for the purposes of this video, I think it's worth saying, like, look, these stocks, both Mara and Coin on the daily, were a little bit overextended. You then get a really quick flush out, and that makes for a really nice kind of just bounce opportunity when the intraday and the daily aligns. Nothing so big. I think these are just simple, easy layups to just think about. Now we're going to CYTK. So this is a biotech company that had been up a lot on data, positive data for their drug. A lot of times following positive data, that's when you start to get M&A interest. So this was one where we get the headline, Novartis is close to a deal. This didn't go as fast or as far as you would think. And I think especially for the speed, that's because this stock was up a lot on the drug data. There was a lot of speculation that this would then be the final step for them to get bought. And we did run up in the days prior. So yes, this was run up, but nevertheless, like when you get confirmation, NVS, Novartis close to deal, that is a really strong headline. If it were not already run up into those days prior, this could have easily gone probably another 10%. Nevertheless, I think if you can get stock in, I don't know, anywhere from 95 to 100, it probably is a pretty fair bet. And what's interesting to point out is once those bars tighten up, we've kind of been dissecting how often these M&As really just trend pretty cleanly. And so I don't think it's so crazy to even take a little bit of a small stab if those bars starting to tighten up and you miss the initial one, because there are places in there where your risk is just a couple bucks, and maybe you catch that the rest of that leg. So again, not super opportunistic. The bigger point I'm making here is just that, yes, we've seen a lot of M&A headlines where we don't need to be some crazy analyst. These do tend to just trend pretty nicely though. Now, the other thing I wanted to talk about is the NVIDIA daily breakout. And so what we have seen essentially is the AI trend really start to take off. This started with the NVIDIA earnings guide up a couple quarters ago. We then saw AVGO with that massive, well, I think it's Broadcom now, dude, whatever. Anywho, AVGO had that epic daily breakout. Semis are leading the market right now. You really need to be watching these for the all-time high breaks. It's almost reminds me somewhat of kind of like back when Tesla was super strong, and some of those breakouts, like the famous, God, what was it price adjusted? I think now after the split, it was like, it's $300, $300 breakout. But anyway, this kind of reminds me of that like epic Tesla breakout to some degree. And what's so interesting is even on this daily chart, you start to get kind of the higher lows and you get really tight. This is almost like the inverse bouncy ball pattern I talk a lot about in the past, except playing it out on a daily chart. Sure enough, we break the highs, which were kind of around 504. And what that allows you to do is, so again, now we're talking about a daily level. This did not necessarily set up on the intraday. So if I'm making a daily trade, this is going to be a swing trade and I'm going to give it a daily stop. Again, because I'm trading the daily chart, it does not make sense for me to trade the intraday. If I'm trading an intraday chart, I'm going to base that on the intraday, but this is a daily chart. What I would be doing is buying that break and then giving a stop at lows and then trailing that. And so that actually ends up working out pretty well. You kind of get wicked out at around 550, but I also want to point out that like I tend to have a tighter stop and I catch the easy legs, right? Then there's people out there like Qualmagi where they'll use a moving average. It really depends how much variance and volatility you want in your P&L and what's right for your style. There probably are swing traders out there that are still long this damn thing because there really was no meaningful down move. There isn't any major reason to get out of this. It did stop me out. I wouldn't really love getting stopped out there just because like it's not as if the trend broke or anything else. Like we were still just kind of having some nice slow sloped up bars. Technically it does stop you out, but there's a lot of other stops to think about and just finding what's right for you. The other thing I want to point out is on this intraday chart, we kind of just broke like butter right through that level and then we just don't pull back. So for a lot of people, this was hard to size into, and I would totally agree with that. But what that means is everybody's kind of fighting for those prints and everybody's chasing after this. And when it doesn't pull back, that itself is a signal. So that was kind of the one main theme I've discussed with a lot of traders is like when something doesn't pull back and it's hard to get stock, that is signal you need to use. No, that doesn't necessarily mean I want to chase a ton. No, that doesn't necessarily mean I want to do anything dumb, but it is worth recognizing that the best stocks will break the level and they will be gone. So that does make me more into holding this bigger picture than otherwise. So I think that's a worthwhile concept. Now I want to touch on the Bitcoin ETF approval. So yes, there was some clusterfucky stuff towards the prior day of the approval where like the SEC got hacked. Like, I mean, that stuff's just kind of a whole mess. Like, obviously we've never seen anything like that. Like, you really need to be careful, but who expects the SEC to kind of be hacked themselves? But the other odd part, of course, is like, yes, this should really just come out in court document format rather than a tweet. So it was kind of weird to begin with, but anywho, eventually it does get approved. A lot of people thought this could be a sell the news event. I thought it could be a sell the news event, but the bigger point that I think people miss is like you need to be open-minded. I had so many texts that week, oh my god, Bitcoin's gonna be sell the news, Bitcoin's gonna be sell the news. Well, so the devil's in the details, right? What happens when Bitcoin ETF approval happens and then we start ripping up after hours? Like this stuff was up after hours, this stuff gapped up, we start to fade off the open, but then we rip higher. And so the bigger point I want to make, which I think people conflated on Twitter, is like it's not really our jobs to have some strong view on whether it will or won't be sell the news, but it's more so how you structure the trade, right? If you say it's going to be sell the news and you short that opening print and these squeeze 10% higher, well, guess what? Like you're going to blow up anyways. Having a view is really only half the battle. It's so much more important to just have a system of how to capture this stuff. On an intraday basis, I don't think this stuff set up super amazing, but I guess here's my thoughts on this. This, given the volatility and everything else and the ranges these had the potential to make a really, really large move overall. So yes, we kind of sell off on the open, we rip higher this Mara that day, and on that opening drive, I'm very open-minded to shorting that failed opening drive. I've actually written up, I think it was a GameStop trade that I've posted before that kind of was the same concept. We make that opening drive. I'm very open to shorting that turn. And now here's the thing, is like, depending on how big picture you want to go, you need to give this room. And I would say, like, especially once we sit by those lows that day, the point I want to highlight with this intraday chart and those little orange bars on this is, so from the lows to the highs, we had about a 3-point range. When we retrace that 3-point range and we start to go neg versus where we opened, you need to be really open to the fact that we might have a symmetric move lower. In fact, we even went much further than that. But if I need to think of a price target and have some imagination of where this could go, once we are starting to hold below 26 bucks, that's like a 3-point range. I'm starting to think, okay, like if this holds below 26, maybe this goes to 23. I personally don't have some super amazing way for capturing like the whole move or have some great guidance. I mean, I do think this is something where you can potentially use the moving average. I do think this is something where you kind of just see how the price action develops. There were once this fails and hangs around 26, there are no meaningful bounces. So it's also something where you could even define trend as making lower highs and lower lows. There's many ways to do it. I don't really have some perfect system for this. I know that'll be disappointing to some of you, but it's just kind of honest. Probably not the best big picture trader in the world, but I'm not shocked that these unwound. But again, the devil's in the details of how you actually capture it. I think looking for the turn after that drive is very possible. Then once you kind of get to those intraday lows, then break, that's also interesting where that can really start to unwind and catch a lot of momentum. It's kind of a similar story for Coin. What I will say about Coin as well, it's interesting that Coin was so unable to do the same strength of opening drive that Mara did. Whereas Mara was probably about 10% above the open, this coin could barely get anywhere. And that's almost a bigger tell that like, wow, if these crack, this is really going to unfold. So again, if we just kind of use that symmetry, we probably had an $8 to $10 range from those lows to the highs of that drive where we failed. As a base case, I'm kind of thinking like, okay, maybe we get 10 bucks below $1.54 and maybe did I do that math right? No, it was more like a $8 range. And so then I'm thinking that can go similar, 8 bucks to the downside. Yeah, again, same rules as Mara. I don't have any great advice for catching the mega unwind or anything like that. Again, there's different ways to define trend. There's probably better people out there than me for something like that. Later on, we then get this docu headline. So this is where PE's competing to buy the company. It was Bain and I believe Hellman and Fried in the article mentioned. Now keep in mind, in December, this was a headline that they were exploring sale. So some of this is priced in once that headline's already out, but nevertheless, this is kind of like a next step of information and data. So I don't think this headline is some mega A+, but again, it's the same pattern, right? This ends up holding prior bar lows. It's kind of the next incremental step in the process. I don't love this trade. I don't think it's a home run, but I do think it's a really nice single to get a couple thousand shares with a proper stop and see where it gets you. So that's another thing to touch on. Now we're going to get to one of the, probably the biggest opportunity. It's hard to say. This was definitely one of the biggest trades, but you need to be fast. But then again, you had stuff like the cryptos and the semis where you really could have all you can eat. Nevertheless, from like a pure expected value, I think like, yes, hard to get liquidity, but the highest expected value you could ever imagine, really. So Save was obviously in a deal to get bought. It was trading at a huge discount to the deal price because a lot of speculation that this deal could be blocked by the judge. If you are on top of these catalysts, like you always want to be on top of this M&A. Like, why is this trading at the discount? Okay, it's because of the court fears. Okay, so then I want to be on top in case this gets blocked or approved. There was so much meat on the bone in either direction. What happens is it eventually gets blocked. If you can get short some of that stock, oh my God, is that incredible expected value. You do need to be a little bit careful as far as the devil can also be in the details with some of these court rulings. Is it just a temporary injunction? But no, it wasn't. This was kind of like a whole full block, kaput, end of story. Yes, you can appeal it, yada, yada, yada. I don't want to get into too much of the legal stuff. At the end of the day, day, what I do want to make a point of is, look, binary catalyst, deal gets blocked. You want to get stock if you can. Same traditional trailing stop. Again, think about it now. We're talking about M&A. We're talking about biotech headlines. We're talking about court rulings. To trade any of this and all of this, nowhere am I expecting you to be an investment banker. Nowhere are you being a biotech analyst. Nowhere are you being like a merger arb expert, court dude, or a lawyer. And the point is, that's the beauty of having a system. You can trade a very diverse set of opportunities with very simple systems. This was, of course, massive home run if you can get stock. Now in the theme of singles, and this is a trade we have dissected again and again and again and again. PHUN, this was running up on some of the Trump stuff. Trump getting, crushing in the old caucus and everything. What happens, like most piece of shit stocks will do, this stock runs up, and that's a huge opportunity for them to do an offering. They announced this right by the close. There is a lot of liquidity on this one. So even though it looks like, oh my God, I'm only making 20 cents, if you do that on enough shares, that's a really beautiful single. Same deal with prior bar stops. We've been over this so many times, but I'm just doing it because it's great expected value, and just to repeat the point. Not so different, plug on the 17th. Again, I'm not going to belabor this either, but my point is just to show you all how many of these singles are out there, and a lot of them just aren't that fast. And with enough repetition, you can start to size these up and make these your easy money trades. And these can be kind of the cushion for a lot of other stuff, other playbooks in your own trading. Now we're going to get to the SMCI breakout. Here's the daily chart, and again, we kind of had big daily resistance at around a little bit over 350. I don't remember the exact price. I think it was like 354 or so. This is even better than the Nvidia for many reasons. Part of why it's better, in my opinion, is because we had a breaking news catalyst. They were guiding up again, and so that is a big deal. We have a semi when these are super in play with the Nvidia breakout. We have it with a breaking news catalyst that it's guiding higher, which is incredible. And then it's breaking to all-time highs. This is one of those things where you need to be in this to win this. When we look at AVGO breakout, when we look at Nvidia, they've all been clean and beautiful. Like it just is something, even if you don't trade this stuff, you need to at least be observing and ever noting and documenting to eventually consider making it your own, because some of the expected value on this is amazing. So a lot of people asked me on Twitter, what are the different ways to trade this? This in particular, there are many ways. You can, again, trade this as a daily swing where you buy that 354 break, you give it to the lows of the day, then you trail it with a prior bar lows. That probably gets you out at around 470-ish, if I'm not mistaken. That's an awesome trade. I mean, like, you're just really not risking that much, and it works incredibly, incredibly well. There are, again, people out there that will give this a looser stop, and maybe they will use the moving average. Those people are having one hell of a home run right now as this approaches 700 in the after hours of the day I'm recording this. So that's one way to do it. The other way I want to discuss this is also the intraday. We did dip off the open, then that quickly gets bid up, and then we retrace and flip higher. So when you reference above that opening price, I think that can be a really, really nice long. And we've even seen that play out in stuff like Meta the last couple days on their earnings report. That's been a decent one. Even better about this trade is where we're referencing above that opening price, that then is pretty much essentially crossing into daily breakout all-time high territory. What you have again is the daily chart lining up with the intraday. So that's why that, like, again, I don't remember the exact price off my head, 352, 353, whatever it is. That is then where you get confirmation where this is now reversing intraday and is technically a long because we're above the opening price. It's then breaking out on the daily on this news catalyst when semis are insanely in play. That is exactly what I mean, where you always want to be skating and moving to where the puck is on the super in play broken slot machines. And sure enough, this ends up working exceptionally well. Again, you know, some people might do just a simple catch the easy leg and do a 2-minute prior bar lows. So you can use the intraday moving average. You can even then turn that into a swing trade when this has no meaningful pullbacks. But again, think about how telling it is that when it breaks that level, it is like butter. We go right through it within a couple bars. We're all the way up approaching $400. That is a super bullish sign. Do I think that means, oh my God, we're going 700? No, but like, I'm not surprised that this closed high tick. I'm not surprised this kept on going for a couple days. So again, you need to always be asking yourself, what is the theme of the market? What is super in play? And if I were to look big picture, right, 2022 even was the year of CPI. That was super in play. 2023, we had the banking crisis. Then we moved into a lot of the low float biotech stuff. So far in 2024, we've got kind of the AI semiconductor Momo trades and some of the crypto, but mostly the big theme, even driving the whole market, is this semiconductor AI Momo. You need to be, again, it might not be your playbook, but just be open to learning and exploring and documenting. That is always the first step. So now we're going to touch on the last trade of the month. This was in Mark. It's kind of similar to the PHUN trade, right? This kind of had the company tweet essentially that, oh my God, we have this huge deal with Microsoft Azure. It makes you kind of think twice, like, what the hell? Those are really big numbers. This kind of seems a little bit off, but the stock does end up running. Then sure enough, later in the after hours, an 8K comes out kind of clarifying, oh, you know, it's kind of just like this spend deal bullshit. It's not actually like really, I mean, I don't know. I'm not an expert. It kind of seems somewhat illegal and I don't know, like a kind of abuse of, you know, interpretation of what they tweeted versus what the actual 8K said. I wouldn't be shocked if their legal team was like, yeah, you're gonna need to correct that and issue a real statement, and that was kind of the cause of the 8K. But essentially, look, I'm not a lawyer, I don't know. At the end of the day, I'm just a trader. The 8K comes out and it essentially just puts cold water on the whole thing. And so again, beautiful little breaking news trade. This has a lot of liquidity, even after hours. Nice little single. So with that, my thoughts on February. Be aware of those AI things. Right now, at the time of doing this and recording this, SMCI is going nuts. Be really smart waiting for the turn. Who would have thought even SMCI would be seeing the high 600s? That is the importance of waiting for the turn, playing safe, staying small. But once that backside is in, you want to be able to go for it. You know, while we're doing it, I might actually just, I'm going to throw in a part with SMCI and the daily chart and how I think about this, just as a little bonus kind of little riff on this to see what happens in the future. But so the way I look at this chart, if we go really big picture, this kind of whole move, like if I were to take, you know, I'm going to take a 3-year weekly chart. This kind of whole move started when we were at $100 and we went 100 to 350 bucks on the weekly chart. We then had major consolidation for about half a year. Then recently we broke out around above that 350. So as a base case, the way I think about this stuff, 100 to 350 was a $250 range. So then I think, okay, like my base is like, maybe this goes, and again, I didn't think it would go in a couple weeks, but potentially that leg can go from 350 to 600. Sure enough, we did that super quick, but that's kind of one way to measure how far could this move go as a base case. Again, that is not deterministic. That does not mean this cannot get above 600. Clearly it did. It does not mean it will stop there. It doesn't mean it will go there. It is just simply how I develop base cases, but there's a wide spectrum of anything that can happen. But that's initially one. So that's where I was thinking is like, okay, like, you know, let's see if this gets there. It went there really quick. Now we're above there. So when I start to say, oh, I think SMCI is overextended now, that's one metric of why I think it's overextended. Now, if I were to go onto the daily chart, things that are interesting to me. On the initial guidance, we didn't really gap up that much. You know, like we didn't even make it just explode off the open. We had that first move down. Yes, we closed super strong, but like, again, why were we even opening at 350 to begin with? Like, if this is some insane, ridiculous guidance that people are now willing to pay almost 700 for, like, why weren't we just going there so much quicker? And I'm also paying attention to just every single inside bar, right? Like 1-23 was an inside bar. We essentially get like mini consolidation bars, 1-25, 1-26, 1-29. And so it just makes you think that, like, wait a second, like, we do have earnings that come out on January 30th, but the earnings essentially were kind of, it was already pre-guided for. Yes, we guide up and yes, we move. But again, it's just like, okay, now the earnings out. If these are so good, why aren't we at 600? If anything, that move got faded off the earnings day. Now we're starting to really accelerate. And what's really interesting to me, especially, you know, again, just for all of you, today is February 5th, and I obviously have no idea how this is going to unfold. But what's interesting to me is this is actually probably, I mean, today we did a bigger bar than the earnings day. Today we did probably an equally sized bar to the initial guidance, right? Which is kind of crazy. There is no fresh news today. That is a really large move to make on no fresh news. This is a stock that was doing kind of $20 ranges on most days, and now on nothing we went up over 80 bucks today. I mean, if you include the after hours, we went up $100. Really, like, the news was out at 350. Yes, we had earnings, but that kind of confirms the whole thing between 500 and 550. Like, the way I look at this, 350 to 500 was a leg with some mini consolidation, 150 point range. So if you do that symmetry, 150 brings you to 650. We're past that now. So that's another measure of like, wow, we're overextended. And this move went even quicker. The final thing I want to talk about is volume. What was really interesting to me today is this had a huge print on the close. It's very abnormal for the closing print to be larger than the opening print. And even on that huge guide up day, when we opened around 350, the closing print that day I think was 130,000 shares. Don't quote me on that, but I think 130,000. Today on Feb 5th, like weeks later, the closing print was 230,000 and it was bigger than the open. Like, that's super abnormal. So those are signs to me that this thing's getting pretty euphoric. I mean, and this was in a text, like, again, you never know what the top is. Like, anyone that says the top is kind of bullshit. I mean, I suspect maybe we get one more day, but I'm also like, here's the probability curves that I kind of estimate in my head. Like, given that super high volume print, and again, right, there's factors like what's the market going to do tomorrow? What's NVIDIA SMH going to do? But given that super high closing print, I think I'm actually a little bit more bearish than most of FinTwit. Like, everyone's pretty much calling this to go to $1,000, or it's like, whoa, just hold on a little bit, you know? I would probably say there's like a 30% chance that we don't break 700 tomorrow and we kind of just fade. I think, actually, let me rephrase it. I think there's a 30% chance like we might not even just open up in this after hours range, right? We were at 680 after hours. I think it's possible we don't even open up there. I think it's also possible that maybe 30% chance we don't get meaningfully above 700, then maybe 30% chance we get another like equally euphoric day that then could be the top. For the top, things I'd really want to see is what does the volume look like on that day? I really want to see, I mean, already we've been doing about 20%. I mean, today we did 17-ish million. So we did probably like 35% of the float. That's kind of crazy to be doing so much of the float so consistently each day. Here's in my mind how I interpret that is essentially the average price of the holders is getting higher and higher, right? So if we just did massive closing print and we did so many shares above 600, well, guess what? 25%, 35% of holders now have an average price. And again, this is a simplification. I get that a lot of shares just slosh around, but just solely for simplification purposes is every time this float is like the people that are trading and are moving shares, the average price is moving higher and higher. So that's where it's like, okay, like it's been a good couple weeks since the initial news, even from the earnings announcement, which was kind of a confirmation. We're 30% higher from there. The price acceleration in the range is starting to blow out. The distance to the moving average is another big key I'm looking at. We're over 220 points from the moving average. That is enormous. And from the breakout, like we've almost gone 100% from that initial day. In fact, if you take it from the closing of before the guidance, we've gone up 100% in a couple weeks on something that, again, barely gapped up. So that's why I have a little bit of not even a little bit. I have a high short bias in this, but nevertheless, you don't want to get run over because I wouldn't, again, I would say there's a 33% chance this could see 750 tomorrow. Do I think this sees 1,000? No, I really think those are just kind of euphoria baseless claims. But yeah, that's kind of my long little riff on interpreting a daily chart because I think this is just pretty timely. Again, I don't know what's going to happen. This is all just me live recording. I also get that this will take a week or two to be produced, so it won't be timely for you all, but nevertheless, hopefully still insightful and, stay safe out there. But really, if you're not thinking long on some of these semis, it's time to start doing so, at least for learning purposes. So that's it. Wish you all the best. Thank you so much.